Hi, everyone. My name is Deja, your mortgage loan officer. I'm here with Dr. Whitney, who's going to be your life insurance agent such coach. And we are so excited that you guys signed up so we can help and guide you through your home ownership roadmap. And I will have Whitney take it away of what we're going to be discussing today, and then we'll get started.
Yes, hello everyone. When I'm not teaching money building strategies, I am a psychology professor, so I have to give you the syllabus. So Deja and I are presenting to you part two of our four-part series for this year. And last month we did what to know before you buy. That brings us to today, which is protect the home you're working so hard for. And next up is beyond the mortgage. Your home is an asset. So last time we gave you a roadmap. Today we're going to build on that and you see where we're going. We're going to wind up with protecting the home going into the new year. So this is all geared towards your long-term goals and breaking them really into small, short-term manageable chunks. So Deja is going to expertly guide us through that and give us some definitions and terms.
Awesome. So move the camera over here to get started with my presentation. So again, I am your mortgage loan officer. What that means is that if you are wanting to purchase a home, whether it's your primary, second investment property, I can help with financing and giving you the funds to be able to do so. I also help with pulling equity out, which we'll be talking a lot about that more in our next presentations to end the year, because again, your home is an asset and how to use it. So today we're really going to be talking about protecting the home. I get you started on financing and getting that loan secured and pre-approval and go. But we understand life changes. So I'm going to teach you a little bit on what I can help on my side and then have Dr. Whitney take it away because she has some really great knowledge and help to make sure you don't lose your greatest asset. So let's get started. So the myth of you're locked in. So your mortgage is a contract with options. So mortgages are designed with flexibility built in. So those long stack of papers that when you work with me that you are signing off, you got to read the fine print sometimes. I'll be able to guide you through it. But again, it is a contractual term that again, you are signing to agree to pay the mortgage back on time. But when you read it, we understand too in the financial industry that life changes, job change, income changes, relationships change, and the mortgage industry has tools that can help homeowners adapt when those moments happen. A mortgage is not just a monthly payment. It's a financial tool with strategies, protections, and options that can often be adjusted when needed. You will not probably be hearing this from if you go to a bank to service your mortgage loan or other lenders that, again, are just wanting to get you pre-approved and that's it. I will be educating you through all your options so you are well prepared. So understanding missed payment timelines. So 1 to 30 days, if again, you're not able to pay your mortgage on time, late fees applies, credit can be impacted, and lender communication begins. So what that means is most banks give you a time period window where it won't be considered late. Usually it's 15 days. It's really going to determine on who's servicing your loan at the time. So if you don't make the payment on the 1st, you usually have till the 15th before then it's considered late. After that window period, if you make a mortgage payment or you don't make the mortgage payment in full during that window period, it's going to be considered a late payment. And it will show up on your credit report that you have one missed payment in the last 1 to 30 days. Then there's the 30 to 90 day late period. So you didn't pay in the 30-day window. Now we're getting into the 30 to 60 to 90 days. So delinquencies become way more serious. Loss mitigation departments may reach out. Homeowners may qualify for assistance programs, which that varies. So you're not making 2 months, almost now 3 months worth of mortgage payments. You're going to get calls from lenders and from other scam callers too regarding your mortgage loan. And why are you not reaching out at least to let them know why you haven't been paying it? Maybe they're seeing that you're not making the full payment, maybe 50 or 75%, but they're wondering why you're not making a full payment because on their end, it'll show that you're just not making a payment at all. 90 days plus late, risk of default increases. Formal foreclosure process may begin. This is really just letting the lenders know if you're not reaching out to them that you're just not paying your mortgage anytime. And the banks, they want their money, and your mortgage is a first lien position, meaning that they will get paid out first. So they're going to do anything they can to, which most likely is a foreclosure on your home, take that home back from you so they can sell it and make their money back. So there's tools designed to help homeowners stay on track. Tools are not failures, they are financial strategies designed to help homeowners stabilize during difficult periods. So one word and term you may hear when you are late on your mortgage is something called forbearance. It's a temporary pause or reduction in mortgage payments during hardship. So common during job loss or medical events, does not automatically mean foreclosure. Repayment options vary by loan type. Then there's loan modification. So you contact the lender servicer. This is different from a refinance, but permanent adjustments to loan terms. So it may help reduce monthly payment, could extend loan term or adjust interest rate, often used after longer term hardships. So these two are going to be varies by the lender servicing your loan at the time. You definitely need to reach out to them. And again, it's always going to be easier reaching out to them as soon as you know you won't be able to make your full mortgage payment at the time that you decide, because that's just going to show that you're proactive, and hopefully they will have those options of whatever is best. And you are going to be talking with them about what is it that you're not able to do with the mortgage payment so they can find a solution that works for you, and keep on fighting. I can't speak for the lender services, but just keep on fighting. Now there's refinancing. This is where I can come in and I can help. So it's replacing the current mortgage with a new loan. So helpful in reducing payment or accessing equity, may help consolidate debt. Your loan will be based on eligibility to refinance if late payments have already started. So what this really means is especially before you know you're not going to be able to make a mortgage payment, definitely contact me. Don't even make it at the time that it's late. Same day, if you, like, say you lose your job or your money needs to go somewhere else, definitely call me right away. What I'm going to do is we're going to look at your circumstance. Same thing that when you first apply for a mortgage application, again, credit pull. We're going to be looking at your income and see what I can do to help you with refinancing and restructuring your loan, whether that is a rate and term refinancing. So maybe it's just extending again the mortgage term back to 30 years, which lowers the payment. Hopefully interest rates are a lot lower than what yours is. We'll structure that so we can make sure that payment is something that you're comfortable with paying it with. And anytime you refinance, no matter what the type of refinance is with me, you always skip a month of payments depending when you close on the refinance, which again will give you that breathing room. So for example, we close on your refinance in June. You won't pay anything in July. Your first mortgage payment will be in August. And sometimes that's just that breathing room people need. Refinancing can also help consolidate debt. So maybe the reason you can't pay all your mortgage or your full mortgage payment on time is because you just acquired so much debt, medical debt, other loans that you opened, or credit lines, student loans, you're helping someone move, you're giving money to someone, you're just running out of money. If you have enough equity in your home, we can be able to pull 80 and sometimes up to 90% of that equity in your home as cash that you can use to pay off everything that you need, or maybe even just cash to keep in your pocket that you need to stay afloat. And that will help reduce a lot of your monthly debt overall. So your only debt is as close to just being that one payment, which is your mortgage payment. And that can help breathe some financial breathing room. Now, your loan based on refinancing, depending on if you already started those late payments. Some loans, depending on which loan you have your home under, will approve you still as long as you haven't been late more than once in the past 6 months. Maybe it's like a 30-day. Some of them are very forgiving. I always fight for my clients and with the underwriter to get you approved, but that's why I always say, if you know you can't make it, or something happens right away where you need to adjust your mortgage terms, please give me a call. I will be able to guide you on what you should be doing in the next steps to help you. Now, there's something also called mortgage recasting. So applying a lump sum toward the principal to reduce monthly payments, keeps original interest rate, terms depend on the lender servicing your loan. So again, whoever's servicing your loan at the time, please call them. And that is like if you do have a chunk to pay towards the principal balance, that's always going to help change your mortgage payment a little bit. You're keeping the terms the interest rate, as it said, but it's really going to depend on the lender servicing your loan. So if that's something you can do, definitely discuss with them that option. So the cost of waiting too long. So biggest patterns lenders see is homeowners waiting too long before asking questions or seeking guidance. People often delay action because they may feel embarrassed, hope the situation will fix itself, fear judgment, assume they no longer qualify for help. Waiting can limit available solutions. Being proactive and reactive is going to help give more options for you of what everyone can try to problem solve for you, instead of waiting so long that we can do nothing else but foreclose on your home and get that home taken away from you. Don't feel embarrassed. Life happens. Everything changes, and you have all these sources that's going to help you. Again, calling and letting the lenders and me know ahead of time will help with tools to get you where we need to get you, where you can pay those mortgage payments on time. If you wait too long, that's just showing everyone that what if happens again? Maybe you're not financially responsible to handle a mortgage payment. So definitely call before it is way too late and we can't help you. What proactive homeowners do differently. So proactive homeowners understand what type of mortgage they have, what their monthly obligations truly are, what options may exist if income changes, and who to contact before the problem escalates. So when you work with me, I guide you through what your loan type is, what you're paying for, where your money is going towards, and understanding strategies in the future for you. If you are working with a lender that doesn't know that and you want to review your terms, definitely give me a call because I can review that for you and see if there's something better that I can help you with, or if your situation is good now. The homeowner checklist is knowing your loan type, of course, understanding your payment structure, review homeowners insurance policies. So these first three, you should, as a homeowner, be reviewing all of this yearly. Talking again with your lender, with your homeowner's insurance agent. And why I say that is because insurances, as you know, with health or car and auto insurance, that premiums can raise, interest can change, policies, again, for everyone can change where you need to renew. Look every year and see, again, homeowners insurance can also, maybe they're charging you too much, and you can shop for different providers. You can also lower your premium so your monthly payment is a lot lower than what you're paying now. So definitely review all of this with your loan officer and your insurance agent. So again, you're still feeling covered, but maybe it's a payment that we can get you a lot lower. Keep emergency savings when possible. Don't stop saving just because you got a home, right? As if you have been a homeowner for a while, you understand that you have things break, or you want to start new projects or do new things for the home. Always keep an emergency savings just in case life happens. Stay connected with trusted professionals and ask questions early on. That is probably my biggest takeaway from this presentation, is that you just ask questions early on. So foundation questions to ask. So important questions you need to ask yourself as a homeowner, whether you're in the home buying process, just getting started, or you're currently a homeowner, always keep these in mind. If homeowners insurance covers the home, what covers me, the homeowner? What happens if the income behind the mortgage disappears entirely? How does life insurance tie into mortgage protection? This is a perfect segue. I'm going to hand it over to Dr. Whitney, because she taught me things in the real estate profession that I didn't know of, that I'm helping a lot of my own home owners and home buyers with the knowledge to be able to protect themselves. So Dr. Whitney, I'm going to hand it over to you. Thank you.
Well, before you hand it over to me, how should people build their homes with their foundations financially?
Ooh, that's a good one. So foundation, and this is what Dr. Whitney is going to also discuss a little bit, what she told me when you talk with her, is think about it like this. Before you ever start a home, you need to make sure you have a solid foundation. That's how you know you're ready. And the solid foundation is going to be, again, your finances and what is available. So these are definitely, even when if you want to get into the home buying process, this is how we tie in and help you get that solid foundation.
Yes.
Alrighty.
Thank you for the segue, Deja. So Deja shared something that I really like to explain to people, which is never build anything without a stable foundation. You wouldn't start building your windows and your flooring without building the foundation of your house. And so you wouldn't think that mortgage protection and life insurance go hand in hand, but you're about to find out how both of these are two of your greatest assets. And really, your greatest asset is your ability to generate income to pay for the mortgage. And so some people never think about their foundation. Some people hope that their finances will fall into place. Well, in recent events, Spirit Airlines just laid off 17,000 people around the world. 17,000 people. How many of those people do you think never thought about their financial foundation? So I'm here to talk to you about what people who are in the beginning of their wealth building journey, maybe you're in the middle, maybe you're in the end, but really who I specialize in speaking to are individuals who don't know where to start, people in the middle class, and business owners. And I'm going to BPP you. I'm going to teach you how to build your wealth, protect your wealth, and preserve your wealth. And it starts with a question. What if? What if the unthinkable happened? Your home is your family's biggest asset, but really it's also your largest debt. So what if your income disappeared tomorrow? What would happen? So homeowners insurance protects the lender and the physical structure of the home. But what it doesn't protect is your family's ability to stay in the home. So the real question is, who protects you? You know, who will watch the watchman? You're busy making payments that keep the roof overhead, but who is protecting you? So real estate is one of the most important investments you'll ever make in your lifetime. But now you're about, 50 times more in debt than you've ever been before. Experts say that mortgage debt is among the best kinds of debt to have, but it is debt at the same time. So as long as you keep making those mortgage payments every time, every month, you should be good, right? But what if your income disappeared tomorrow? Does that answer bring you peace or does it disturb you? So because mortgage protection insurance is a new term, let me define it so that we can all be on the same wavelength. Because there are certain events that could hinder or eliminate your ability to keep up with those mortgage payments. So mortgage protection insurance, MPI, it's a specialized life insurance policy, and its purpose is to pay off your mortgage if you pass away or if you face a qualifying illness. So remember, mortgage protection insurance is not required. Your lender requires homeowners insurance, and you heard Deja say that, but that protects the lender. MPI is coverage that protects your family. And the good news is that you don't have to die to be protected. That's the old way of thinking of life insurance, okay? I'm going to show you the new way of thinking of life insurance, and I'm going to show you where backup money comes from. So here's our first term, MPI. I'm throwing another term at you, PMI. They are not the same thing. They're similar, but the difference is in who they protect. MPI protects your family. It is optional. You are not required to have it. Private mortgage insurance is usually mandatory if your down payment is under 20%. That's PMI. That one protects the lender because the banks need to have their own protection system in case you default on your loan. So it does benefit the bank. It does not benefit you. Whereas a life insurance that protects your mortgage would benefit your beneficiaries. So, for example, you work at a job, you have health insurance through your job. When you leave that job, you don't get to take that health insurance with you. It stays with the job. But if you were to have private health insurance, like I do, I'm on the private market for all the monies that I pay, but I pay for peace of mind because it follows me around. It does not determine where I work. And so that's the same thing. Private protection follows you around, not the job, not the house, but you. Me. It protects you. So where does the backup money come from? Let's say mortgage protection insurance kicks in when you die, but living benefits kick in while you are still alive. With living benefits under a life insurance policy, there is no death. Okay, there's no death. There's only a diagnosis. That diagnosis would be considered something like a terminal illness, critical illness, or chronic illness. So if you know any cancer survivors, that would be a terminal illness. Chronic illness would be someone who's living with diabetes or arthritis, or a critical illness. That means that you know a stroke survivor or heart attack survivor, or maybe you're that person. Let me ask you a question. When you were going through your illness and recovery, would a lump sum check of up to $500,000, oh, it's tax-free, by the way, would that have helped you? Or would you have returned it and said, that's okay, I have the good kind of health insurance? No way. There's no one who cannot use backup money. And that's what I specialize in. None of the life insurance policies that I connect you with, whether it be permanent or term, don't have living benefits built in. So let's say, for example, you buy a policy and you choose a set term like 30 years, which would make sense because your mortgage is probably 30 years, excuse me, or maybe it's a permanent policy. As soon as you make that first monthly premium, you have access to being fully covered. Your death benefit becomes your living benefit. If you were to get ill, you would be able to claim your living benefits depending on severity of the illness from your doctor, and that would qualify you to get a tax-free lump sum check. What you do with that check, that's up to you. I know I would pay off my mortgage and remain in my home and not get evicted while I'm focusing on healing. You could focus on paying off your mortgage, your medical bills, medication, vacation. We have one client who built a yoga studio in their home using their living benefits money. So let me say that I do not sell mortgage protection insurance. That's a very limited, specific type of insurance. I want something to last your whole life and grow with you. So what I connect people with are financial tools like cash value life insurance, and they use it as their own private mortgage protection insurance. That's certainly what I did. My money coach taught me to take however much was left on my mortgage. I told her that loan amount, and she said, okay, we're going to use that as the foundation for your life insurance policy, and we're only going to go up from there. So our mission really is to make sure that families are protected from losing their homes, their assets, due to unforeseen medical expenses. Protection needs to be at the foundation of everyone's financial plan, not just wealthy people. So there are several benefits of life insurance. In fact, there's an infinite number, okay? But I'm only going to bring you 3. So life insurance, of course, brings you peace of mind because you know that your family won't also be evicted if something were to happen to you. Do you have anyone who's depending on you financially? Then you qualify for needing foundational protection. You don't also want to be evicted just because you got sick and refused to die. Now, you also want to protect your legacy. Your home should be an asset, not a liability, not a burden for the people who you love most. And what we're finding is that a lot of people are going to work sick, or they're selling off their assets because they got sick, even when people have the good kind of health insurance. So in order to keep your assets an asset and protect them from becoming burdensome for who you leave behind, you need to have a life insurance policy, if not more than one. And living benefits means that you do not have to pass away to access your benefits. They are living. They are not death benefits only. That is the old way of thinking of it. They are not extra. Well, for some companies, they do cost extra, okay? But I only work with companies who do not charge extra. This is too good to keep to myself. I got this when I found out about it. Everyone who can qualify deserves to have benefits while they are living. So what would trigger living benefits? How does this whole thing work? So let's say that you have a policy with a $500,000 death benefit. God forbid you were to get a diagnosis, so no death, just diagnosis. That death benefit will accelerate up to 100% of that $500,000 while you were still alive to do with whatever you will. It is lump sum care, and if you want to fact check me, it's tax-free check out IRS code 7702, meaning that you, or not you, but a person can get through an illness without having to access or sell off any of their assets. Okay, so it used to be you had to pay an extra for this, an extra rider, but in the last 10 years, it's become free with this new type of life insurance. But nobody knows about it. And that's my job. That's why I'm here, because that's what our work is about. We're sharing this with everyone we know, love, and care about because we think it's that good. And so who is this for? Who should be listening to this? You should be listening to this if your family depends on your income. Maybe you have a partner who could not cover your mortgage payments alone without your help. Maybe you have children, or maybe you have elderly parents who depend on you, or family members who you are now the primary income earner for, and you need that security because it's not just about you anymore. Or maybe you're like me, single and free, and you just have a dog who depends on you, and so you want to build your long-term wealth. And I want to access cash value while I'm alive. I want to BYOB. I want to be your own bank. I don't want to have to wait to die, because you know what wealthy people don't do? Trade their time for money. Okay, they trade their assets for other assets. Life insurance is not an investment. It is an asset. It will never lose you money. So it only allows you to participate in gains. So here are a couple of myths versus facts. The myth is that I can't use my life insurance until I'm gone. Wrong. Your cash value life insurance policy allows you to make loans or withdrawals to supplement your income, especially while you're in retirement. You don't have to wait until then. If you're counting on Social Security for your sole source of retirement, I hate to burst your bubble, but Social Security is scheduled to go bankrupt by 2034, meaning it is going to have to evolve if it's going to be helping you. What about MPI and MPI? They're the same. They have the same letters. False. PMI protects the bank. MPI protects the family. They serve completely different purposes. One is not worse or better than the other. They're two sides of the same coin. What about, I don't own a home yet, so you're wasting your breath. This isn't for me. Well, your house, your car, your job, none of those are your biggest assets. You are your biggest asset. And let me point. You are your biggest asset, and only you can prevent forest fires. No, you must lock in your coverage early, because the earlier you are, the healthier you typically will be. So early coverage is always smarter because it gives you more time to put money into your tax-free compound interest growing account. Anytime you get a tax return, if you do an extra gig job or you work a contract job, throw that money into your account that's growing with compound interest. And finally, oh, but if I refinance, I need a whole new policy. Well, let me tell you, our clients receive annual financial checkups to align their coverage with their current needs. There's no starting over. Our services are free to the client, and we never charge you to evaluate your life and your life goals and your financial goals. In fact, evaluation is built into our system. So here at Black Lightning, I'm really excited to share with you that your home is more than a roof. How and when do you even get started? Who do I know, and how do I contact them? Well, you can talk to me when you're talking to Deja. You can talk to Deja when you're talking to me. There's no wrong time. We help people set plans from a year out to a month out from the home purchase. So why wait to protect your ability to generate income? You're renting, you belong here. You're refinancing, you belong here. You want a family, you have a family that matters to you. This is the right place to be. So here are some ways to contact me, because if you're interested in BPP, building, protecting, and preserving wealth through free financial education and strategic planning, then you know where to reach me. Thank you so much for your time, and look how cute me and Deja are. We're happy to provide free consultations, and we have another event coming up. We do one event per quarter, and we're really building up this 4-part series to walk you through wherever you need to be met at. there's nothing you need to have prepared to get to the table with us.
100%. Scan those QR codes, fill out our questionnaires, or again, our Calendly links to schedule a consultation. We would love to guide you in the right way so you, your family, your friends can all be protected. And we'll see you guys on the next one.
See you for the next quarter.
Bye.
Bye, y'all.